Well, good morning, everybody. I hope you're well, or good afternoon, I guess, if you're in the East Coast. Sorry, I keep forgetting I'm on the West Coast and it's different. And I hope you had a good weekend. Yes, thanks, Wayne. I'm good. And yeah, let's just put this important message up. I'll just make sure everything is good. I trust you can hear and see everything okay, including the disclaimer and risk warning slide. Thanks, Ross. I'll connect with you later, mate. And obviously the opinions you hear are those of Mike Smith, not necessarily representative of Go Markets. Please bear that in mind, as well as the important point that this is for educational purposes only, should not be taken as advice to take direct trading action, because you've got a trading plan to tell you whether to do that or otherwise. Let's have a look at what's coming across the news right now. Of course, well, we had another bizarre day on markets yesterday in the US. We've got US equity markets popped higher to record their highest move to the upside on a single day since June. Didn't quite recover the big day we had last week to the downside, but with decreasing bond yields and some positive data that came in from the PMI manufacturing side of things, then that helped things higher. When I last looked about half an hour ago, US futures are model higher. We'll have a quick look at that. And of course, US futures are helping the Asian markets higher a little bit, as well as last night's performance. Thanks, David. But we're off the highs a little bit, and we'll have a quick look at that in a moment. If I just have a quick look across what's happening in the major indices. When last I looked, the ASX was initially 0.8% higher, and now just coming off a little bit. Down, still up, but up around about 0.4%. The Nikkei's up about 0.3% in early trading as well. And we're seeing a big move in the Kospi, obviously, with that being the South Korean index, which is heavily reliant on tech, which outperformed last night. US dollar index surprisingly continued to weaken on that equity strength, and precious metals remain weak. And you know, I've been a precious metal bear for some considerable time, and that appears to be coming to pass, though how long that lasts for, of course, depends on how well the US dollar does. In terms of data, we've got Australian interest rates and policy statement that goes along with that, and German data from the European powerhouse, looking at retail sales and employment numbers. Those are the highlights. Not much coming out of the US tonight. I think there's one of the Fed members speaking, but that's not likely to produce anything new in, good day, Gary. It's not likely to produce anything new in terms of market sentiment, I would suggest. Probably the major driver this week is how well or otherwise the stimulus package passes through the Senate. There is a special sort of situation being put in place that a simple majority will get it through, rather than a 60% majority, which is used, at least 60% voting for it, which is the usual state of affairs. So that'll be interesting, and I think that starts this evening. So any positive news on that will be obviously well received by markets, possibly help re-challenge those record highs. But at this stage, it remains a market which is interesting, should we call it. Let's have a look at some detail around what we've just been talking about. We can start with the futures, and you can see that they're pretty near neutral on the Dow and the Russell. Nasdaq is outperforming the futures contract, and the S&P is just above neutral as well. See the USD continuing to look strong. The Aussie and the Euro appear to be the weaker currencies, with the yen also struggling a little bit. Apart from that, there's not a great deal of move, but we can have a look at some of these crosses in a moment. You see gold and silver looking weak again in Asian trading. So just for clarity, this is the futures market since Asian opened this morning. Both gold and silver look positive early on. And you will see discrepancies between these figures. I know a lot of you guys have a look at this, but just to explain something, you will see discrepancies in this, and that's simply a reflection of the futures contracts that you see on your CFDs versus the futures contracts you see here, which is usually what you see on the likes of Finviz and other places you'll look at futures usually would be the next contract, whereas with the CFDs that you trade, then they're usually dated further than the next expiring contract. And that's important because there's lots of price action goes along with these contracts roll over, which really mess with pricing in the short term contracts. You can see the oils come off a little bit. Brent was up around about that 65 level, so it looks as though we're stuck at that level with $60 on WTI not been surpassed. And so that's that. Let's look at the economic calendar. As I've said, it's the interest rate decision, more importantly the statement that comes out along with it, that will be the focus this side of the planet. We've got the current account balance has beaten expectation, but interestingly, the building permits took a little bit of a hammer, and that might be one of the reasons why that why the ASX has just dropped off a little bit. And we'll have a look at the whys and wherefores of that when we have a look at the share CFDs in a little more detail in a moment. See retail sales and unemployment coming out of Germany, and some CPI data. This inflation data is going to be closely eyed to make sure that it's not reflecting too much those increases in bond yields. If we see that, if we see CPI beating expectations over the next couple of weeks or so across the board, we may see those bond yields start to rise again. And that's probably one of the major risks to the market at the moment. Not much, as I said, going on in the US. We've got the Fed's Brainard speaking in the middle of the night, but that's not likely to push markets one way or the other. And of course, if you're interested in trading the Canadian dollar, we have got the GDP numbers out. So let's have a look at some charts. And as always, guys, if you want me to have a look at something in particular, then please do so. Where better place to start than the US 500 daily. And you can see that massive candle yesterday didn't quite engulf that candle we saw on Thursday, but nevertheless, a pretty positive day. As I said, looking pretty neutral at the minute. Although we started positive, we just have a look at a 5-minute chart. You can see how we started positively in Asia, but we've just drifted down a little bit. And so really sort of watch this, the lows that we hit during the session last night. If we do get a push through those, which it looks as though it could be heading to that, and bear in mind, of course, a lot of this could be profit taken. If we put this into context, there's yesterday's action. So we had the positive start in Asia, another pickup once European markets opened, and then a continuation of that. Really, since the last couple of hours of the US session and the first couple of hours this morning, we haven't really shifted at all. It wouldn't surprise me to see it pull back to around where this 200 MA is on the hourly chart. Look at the Russell, it's not a dissimilar picture. We've got that big candle yesterday, which looks pretty positive. Sorry, I muted myself accidentally there. The VIX, of course, is moving downwards. After that big spike on Thursday, we've had a retracement back to the norm, which for now appears to be that between 20 and 22, or 20 and 23 perhaps. Now, just to put this in a historical context, average I think is around about 20 historically. So it is moving back down to historically normal levels. But of course, that can change in an instant. And we are seeing a slight move up based on the fact that equity markets have just dropped off a little bit since Asian Open. In terms of will the Russell keep climbing? Well, look, it's a good question, Ross. In terms of the short term, you can look on an hourly chart and see where it's sort of flatlined around about this 2280 level. If we do break that, then we've possibly got 20 points up to 2,300, but of course 2,300 is a nice round number and the market likes those. So it wouldn't surprise me to see a pause in that on the short term. In terms of the long term, much will depend on what happens with the stimulus package and whether that manages to get passed by the end of the week or not. There is a deadline on that on March the 14th, and that's when unemployment insurance runs out in the US. So in the short term, that is the line I will be watching. After that is whether it crosses that 2,300 level. So those are the two key levels to the upside I would be viewing. But of course, on the daily chart, really, we can take that line out of it. So that's for short-term trading. So there's the record highs, and there's where we are now, really, determining whether we come back down, perhaps test this 10 AMA or not. But good question. Look at the US dollar index, then you can see there that we've continued to move higher. Surprising yesterday to see USD and equities move together to the upside, and we've got a continuation of that in Asia, and that is a reflection of that weakness again in equities. We'll look at gold and silver, and these are looking very bearish. With that US dollar move up in Asia, we were positive to start the day after a neutral day, or slightly down but neutral candle on silver. But you can see how that test of that 2630 looks absolutely critical in terms of the next move on silver. If we do break through that, it could precipitate some more selling, send us down another 5%, around about that 25 in the first instance, but possibly even as low as 2480 being the support technically. And of course, gold, I put it on a weekly chart just so you can see context. We are now at lows we haven't seen since May, and there's the level that I'll be looking at. There's quite a way to go down to that. There's around about around about $30 or so down to test 1687. But again, if we do challenge that, if we do break that, that's going to be a technical signal for the market to sell off. And again, the sell-off could be quite significant, and possibly down another $100 to that 1578 in the medium term. So much may depend on what happens with those inflation numbers. Those if those climb, we could see a little bit of recovery in this. If they drop, we could see them. We could see this sell off further. Quick look at. Let's put this on a daily chart. Quick look at cryptos. It looks as though we're trying to find a bottom on Ethereum, but still way too early to consider this a bounce. And if we look at Bitcoin, it's the same sort of picture. Of course, we've got an established support in place at around about 44,000. That's the level to watch. We've tested that over the last couple of days. Again, we started Asia positively, but we've just dropped back to just above neutral. So just watch those. Now let's look at US dollar. With that US dollar strength, we're seeing weakness, particularly in the euro and the yen against that we saw before. And there's the euro really testing that 120.40 level quite significantly. If we look at an hourly chart, you can see that in all its glory. And if we do get a close below this, it suggests that we've got a move to the downside, which might gather some steam. Let's just pop an ATR on this just to see where it's at. There we go. We'll put a 6 ATR on that, and we can see that it's at around about 8 pips. So a 4 pip move below that might precipitate some more selling. So if we get to 21.20.35, that may be interesting, which would take us below all of these wicks that we see here. If we look at the US yen, that's the other interesting performer. I put it on a daily chart to start with here. You can see how important the level that we're trading at now is, and you can also see that massive move up really over the last week and a half. You can see the moving averages diverging, which suggests there's still a lot of momentum in this trade. These candles are quite long. This is Asian trading today, so you can see again that trend continues to take us up to this level. Look at an hourly chart, you can see how we've tested it once and pulled back. So it's difficult to judge as to whether this could be it or not, but you can see the signal line on the MACD suggesting on the hourly chart that we're maybe not in the best place. Now it's hit resistance. It's called resistance for a reason, so we do need to see something positive to in terms of a major move, but maybe that'll come if it breaks 107. So that's the level to watch out for on the US yen. If we look outside that, let's just have a look at, we noted that the Aussie was looking a little bit shy against the yen, and perhaps this is a good example of a trade off a bounce or trading a bounce of a key level. We can see that resistance at 83.05 on an hourly chart has been bashed against 1, 2, 3, 4, 5, 6, 7, 8 times over the last 10 trading bars, and you can see that pretty substantial engulfing bearish candle which has taken out all of these previous 9. So we could see this move down in the first instance to test around about 35 pips to test that 82.40 level. So there's some nice levels here to keep an eye on, and there's the 82 level, which is probably a more established support. We just look here, you can see that 82 level was where the level that we tested last week. So that's the one to keep an eye on for if you're interested in a long-term trade, which might take us back down to 80 over the medium term. If we see some weakness in the Aussie dollar now, much may be dependent on the noise that comes out of the RBA. If they start to suggest that these, I mean, look, if we look at back to that Aussie US chart for a second, and we put that into context, you can see there that this is highs we haven't seen since the beginning of 2018. There's going to be a point where the RBA starts to get a little twitchy about that due to its potential impact on the competitiveness of Australian companies versus those overseas, particularly in the commodity space. And this may be, so if there's anything referenced in that statement to Aussie dollar strength, then that could be important in terms of the next move on the currency as a whole. New Zealand yen, not a dissimilar picture. Again, we've got a really nice line in the sand. We're just getting a bit of weakness in the short term on this after it bashed against, if you see that level at 77.70 that we've previously referenced, you can see it bashed against that and has moved down over the last 3 candles. So this 77.50, there's probably again around about 40 pips in this if we do break this level. We're looking at this from a technical viewpoint on the 30-minute chart. You've got to be nimble in these markets, though, if you're going to take advantage of this sort of stuff. You wouldn't be hanging on for very long and have a profit target which is reasonable. But we've got some nice levels there that would be useful in determining whether this is worth a look or not. We've got a nice breakout level. We'll probably put, if we just pop an ATR on that, let's just check out where it is. We use a 6 because of those bigger candles rather than the default 14. You can see that's around about 11 pips on this pair. Bearing in mind it's the second decimal point on the yen. So maybe 6 pips down from that. So around about 77.45. And then you'd possibly place a profit target the same distance, sort of 5 or 6 pips above that key level there. And so ultimately it might be about a 25 pip trade. If that's of interest to you, that would be our chart of the day for right now in the FX markets. So let's look at the ASX 200 overall. You can see again we had a really sharp move up yesterday. That started, and remember, of course, this is a futures contract, not the index itself, but you can see that started early on yesterday on Asian Open, moving us back over this 6770 level, which I think technically is quite important. If I put this on a line chart, you can see it's tested this level and traded around it, both as resistance initially and and more recently support. So we're back mid-range, but you can see how that's dropped off since Asian Open this morning. Just put that on a 15-minute chart, just show you that in, and we'll see this as we look at the live spot chart as well. But we're trying to find a support temporarily at around about this 6,815 level on the futures contract. But you can see the short-term MAs have crossed on this very short time frame. So it just could be a little bit of profit taken again if we look at what happened. This is yesterday's trade. Again, there's Asian Open to the upside, European Open once again, and then once the US kicked in, we moved higher with just a little bit of a retracement there. So it wouldn't be surprising to see us test the level we're at, quite simply because that was a key level at around about that 6,800 level. So I would say that's the level to keep a close eye on. And way too early to consider going long on a short time frame. You'd need a bounce and over, let's say 6,830 rationally to suggest that this is a bounce, and of course limited upside with those pivot highs put in place there. So let's look at some of the let's look at the index sort of live in more detail to see what's moving on the share CFD front. Let me just get all this together. Let's just refresh. Okay, so we'll do what we usually do in terms of just having a look at the index overall. And you can see what I've been talking about on the futures contract is reflected here. So we had that early pop-up, a move downwards, and now we're sort of trading in the last hour, trading within a relatively tight range, about 0.4% higher. If we look at the advances versus decliners, you can see they're pretty even. This was looking a lot more rosy earlier in the session. So we're not far from one-to-one. And we're seeing quite a mixed picture in terms of sectors doing well. We can see that a lot of the banks are doing okay. We're seeing a rise in Bendigo, in ANZ, in CBA continues its move higher. In resources, we've got BHP slightly higher, but if we move down to FMG, you can see they're slightly lower. Been a drag on the market. Retail is a mixed picture. You look at JB Hi-Fi, who are outperforming today. We'll have a look at a chart there, see where that's at in terms of context. Whereas on the online Kogan is not doing well at all. So all of the banks look positive at this stage. And if we move down to energy stocks are looking a little weaker based on that pullback in oil. There's Oz Minerals, slightly higher as well. Some of the travel stocks are suffering a little bit. So Qantas is not doing particularly well. Webjet is slightly weaker again. And we've got Zip, Xero, and Afterpay all doing well in the online business space. So let's just have a look at some charts. And as I said, as always, we can have a look at David, you're very welcome. It's been great to have along. We'll see you on Thursday if you can make it along, buddy. Let's just have a look at some charts and put some stuff around this. So let's start with ANZ, which has been outperforming the banks. The other one I'm going to have a quick look at is Macquarie. So if we look at where ANZ are in terms of context, you can see we are still very, very much up in uptrend. We've paused around this 2670 level over the last few days, and we're looking to move higher again. But you can see that's well, you can't see very well, but that's a doji candle. If I just bring that up a bit, you might see it better. There we go. So you can see that's a doji. So we started here, we moved up, and now we've moved back down again. So we look as though we've got some support in place at around about that 26-23 level. So there's a nice technical stop area if you are long in this now, which of course you could have moved up if you were in this earlier. We talked about this breakout here being important. So if you're in this from here, you've been now contemplating a move up to there as a trail stop. You can see this candle isn't particularly compelling. See where it ends up at the end of the day. I also wanted to pop up Macquarie, which of course operates slightly differently. Again, we'll look at contact. I'll just take this back a little bit, but you can see how choppy this has been over the last couple of weeks or so. We've got support in at 142.30, and we've got a level to the upside that we're eyeing, which was last week's high, at around about 148.19. So it looks as though the market feels as though it's got some momentum to potentially test 150. We'll look at the battered afterpays of this world, etc., which you know have been a favorite of ours over the last few months. Let's just take off those trade levels, trade history. So you can see that major pullback that we had in all of these stocks. This was post earnings release, so down about 27%, but we're managing to pull back to this level here around about 121.60 would now be suggestive technically of the support level. A very interesting move today. If we look at the short time frame, you can see shot up out of the blocks up to 133, so a move of around about 6% on open, but we've just given all of that away over the couple of hours or so the market has been open. So not hugely compelling, and continues to sell off. If we put a zip up, you'll see a very similar picture, and if we put up zero, this has not had quite the demise of zip and afterpay, but you can see that pullback again since we had that early move up in Asia, and we've got a pullback over the last half an hour or so. So not looking particularly happy in that space. Now, we talked about potential energy weakness. We look at WPL. Let's put this on a daily chart. So really, we weren't convinced of this last week when energy was starting to rise, unless it broke 26.20. There's the line from last week. It didn't get to that level, so retraced and had a little foray towards the upside and potentially to that 26.20 level, but a failure to do that. You can see it's sort of now trading within really quite a tight range, about that 24.80 level. But we've got a support in at the 200 MA. If we look at Oil Search, which has obviously been outperforming a little bit, again trading within a range, not a compelling reason to take action either way on that as yet. Looking at Seek, which has been absolutely battered last week. Let's just alter where this line is. So we're suggesting a technical support at around about 25.76. We tested that to the downside and recovered. Again, a positive start to the day, but we're just dropping off to some degree. SGM was one that I noted good on your Ross. Sims Metal Management. So I think this is scrap metal Sims do, but there is the key level, which it's testing now at 14.38. That's very interesting. Let's just have a quick look, since that's outperforming. I wonder whether BSL is outperforming as well. It certainly is today if we look at BlueScope. So that steel space appears to be quite good, maybe suggesting an infrastructure, some sort of extra money coming into infrastructure, I guess. Not sure that housing data will have done BlueScope much good. If we put this on a line chart, then really that would be the level of interest, and even then that would be quite an aggressive entry. You've got the next resistance up at just a little over 2%, so it might be best to wait on that, but Sims certainly looks interesting. We mentioned retail stocks. We'll just have a quick look at JB Hi-Fi, which again was mutilated over the course of the last couple of weeks. We're looking for a reason to potentially trade a bounce on this, and this is interesting. If we sort of put a support level at around about $44 there, once it broke through that 200 MA, then we got it precipitated more selling as breaking key levels often do. So what we're doing is we're eyeing, if we just put this on a line chart, you can see we've been here before. Through November and December, we had a resistance in place at 46.30. So if we just bring that up and look at what's happening now, why is that level important? And this is our chart of the day, because we've got that level, which historically looks important. If we take this back, you'll see even more evidence of that. See how it was support here, resistance here, and now we're retesting that again after this major pullback. So if we break 46.30, there may well be a lot of buy stop orders sitting just above here. That would mean that we've broken back through that 200 MA over that key level, and we could potentially see a move up around about, in the first instance, around about 4.5%, but in the medium term, maybe up as much as 10%. So that's one to watch to the upside. Again, these markets are very, very choppy still. So one day doesn't a recovery make, despite how good a day it was. So don't get too excited, but with the potential positive news on the horizon, I think there's going to be more tailwinds than headwinds over the next couple of days, perhaps. Then just position size according to market risk at the moment, I would suggest. Qantas is disappointed. It looked as though we're up for a big move higher. We hit around about 525, and then we pulled back down to that $5 level, which has been a level we've talked about for some time. So just one that hasn't happened, unfortunately. And the other one we were tracking last week was Woolworths. And with Woolworths, we suggested on a line chart that we may get interested if it broke this level here at around about 40.20. But the upside was limited to perhaps in the first instance around that 41.06. I'm not sure we've got enough momentum in this to go further than to be back into this range here. So that really, in terms of the potential return on that, I think that unless you were to enter quite a large position, you'd probably technically place a stop below that level. So around about 1.44 down. I think the maximum you're going to get is around about 1.5 on this. So it's about a 1-to-1 risk reward ratio. I think there are possibly better opportunities elsewhere on this. So if we look at a couple of, just checking through, make sure we've covered everything that you wanted me to. All good. So if we look at, obviously the US had a stellar evening. Let's just put on some charts that I noted were of potential interest. We're just going to let them catch up a little bit. X, which is US steel, if Aussie steel is doing well, you may expect this to follow, but quite some distance to go before you would consider an entry in this. But there is a nice line in the sand at, if we notice here, this was resistance at around about 1940 here. We tested this 3 times in the last 6 candles, sorry. So 1950 looks like an important level for X. Zoom is reported earnings after the bell. This is going to look very, very different after open this evening. I think they were 8% up in after hours trading. So despite but bear in mind also that there's been a lot of, in the last quarter, there's still been quite a lot of the US been in restricted movements due to COVID. So we've had if we look at a weekly chart, actually what we might do is just get rid of all these lines here, because they do tend to build up a little bit as we put one chart on top of another. So if we look technically at this, then it looks as though we've got some support in place around about 336. But since that move higher through early Feb, we've we've pulled back again, and now we're in the middle of that range. So bear this in mind, and this is why it's important that you always look at the long-term context. So if we see this on a daily chart alone and we see it break 447, would be game on. But bear in mind there's potentially limited upside here. So it's not something that, again, is going to offer a great risk-reward ratio, possibly. So we see that on the weekly chart. So that 472 level, even if we break 437, for short-term, on-the-ball, nimble traders who want to be in and out, there's potentially $40 to be made there. So not an insignificant level, but bear in mind that the ATR on this, we just pop it on, is nearly $50, okay? So that's a standard candle move. So it could even take that out in one session. So that 472 would have me interested. Before that, I'd be a little cautious. Sorry, LYC, I forgot to put this on, and LYC is one that we talked about last week, and look where it is now. We've got a key level at 615, which we referenced last week. You can see how it's bashed against that through the later part of the previous week and early last week. We're now back at that level, but look at that candle, rejecting that up move in today's trading. See where that lands when all of the dust settles on today's trading. We're in the last hour. Twitter have been a favorite of ours over the last few weeks, actually. And again, we got a big candle yesterday. Not one that we would have been keen to trade, but if we get a follow through on that 73.70 level was again a level we talked about last week. This held up very well in comparison to the rest of the indices last week. So there is one to watch going forward. And also, if we do get sign of a stimulus being passed, then again, one of our favorites, and this is maybe why this has popped, one of our favorites, Caterpillar, has already disappeared into the distance. So there's what we're talking about. 200 was the key level on this, and we've broken higher. Now we've pulled back. So if you weren't in this already, then you've got a nice pivot high there to keep an eye on. Stimulus gets passed, this is one of the stocks that'll pop. So this is possibly a chart for the week rather than a chart of the day in the US. Okay, guys, is there anything else you would like me to have a look at today? Just type them in if you are interested. Update on the New Zealand yen. Yeah, New Zealand yen, you see, we talked about this level a few minutes ago at 77.50. It's holding on to that, which is sort of interesting. Wesfarmers, certainly, Chris. So we got, let's just catch up on the, yeah, big drop last week. Nice potential reversal going on here. Put on a line chart. That's the level that would have me interested in this technically for a bounce around about 54.64. Lots of nice upside in this potentially. Of around about 6% before we hit the next key level. So it is one to keep on your radar, perhaps, for that reason. So if you get a break of this level, or maybe half an ATR above this level, so around about 50 cents above this level, so around about that $52 level, you've got a nice level which you can use as a stop, and a nice profit target in there, possibly around about that 54.70 level, perhaps, would all technically make sense. JB Hi-Fi. Yeah, I did reference these earlier. A very interesting chart on JB Hi-Fi. Sorry you missed it, but I'll just quickly refresh. Nice bounce off this. This is our ASX chart of the day. So we've got a nice V-shaped bounce. There's that 200 MA, which is bang smack on that key level at 46.25. So a push above that higher would suggest that that trend reversal is complete. Luca. There we go, Joshua. Let's drag that on. Just give it a chance to catch up. Very interesting chart. Indeed, 750 looks absolutely critical on this. For the obvious reason, you can see it in quite clearly there. There's the 200 MA. Market's obviously treating that as a resistance. So we've really failed to close over that with a bullish candle at all. This would represent, where we're at now actually represents a high not seen since that major drop post earnings in October. But we've still not got that compelling argument to move forward. Let's just take it back and see if this is important longer term as well. In turn, yeah, you can see 750 looks important historically as well, and the market will be looking at this. So if we just put a level right on that 750 level, you can see this was the confirmation that this was an uptrend. It slowed down a little bit here. This was support here, resistance here before it broke through. So we look as though we're shaping up for something similar. So good sport, Josh. I think there's potential in this. And if we do get a break, then it wouldn't be surprising to see us close that gap. It's not a massive mover in terms of velocity historically. So it'll be this sort of, you can see here, we've got a drift up, drift up, drift up every time it moves up. So it's going to take a little bit of time if we are to close that gap, but certainly keeping an eye out for a bullish candle above 750 would make a lot of sense. Nice chart. Okay, guys, well, look, I think that's probably it. I'm just doing a little check through just to make sure that we've answered everything that you put up. Thank you once again for participating. It's always great to have you along. We'll see you on Thursday. Also, we've got a couple of other things coming up. You should receive an email about, if you're not part of, Brett, you're very welcome, buddy. If you're not part of Inner Circle, then we've got a session on tomorrow evening, which is, I'm going to rip apart where the markets are now. So I'm just going to share this link with you now. So if you're not part of that group, get on board. There we go. And there's one more I want to put in front of you. We've been running these intermediate trading clinics. We had one on trading planning, then we had one on measuring trading performance. The next one of these is due next week. And this is a two-part session. So this one will run on Monday and is titled Trading Psychology, Control Your Mindset, Control Your Results. So we're going to be doing that on the, on the two subsequent Mondays. So if you want to get along to that, I think that'll be well worth. I'm going to be not confrontational, but I'm going to tell you how it is on that session. So I really want to see you guys rock and roll with this, and I think that'll be a very positive session. So I'll just pop this link into chat. I'll call it Psychology Clinic. Okay. There we go. It's in chat now. So if you want to rock up to that, then it'd be great to see you there. Let's just quickly check in on the futures, which have turned a little bit negative from when we last saw them. You can see they've just dropped off a little bit. Only the NASDAQ remains marginally positive. And you can see the US dollar still looking strong against the other currencies. Aussie starting to look weak. It might be worth checking in on an Aussie dollar chart or two. One that we didn't have a look at. There we go. Aussie yen. We did look at. So on the hourly chart and the yen, you can see we're looking a little bit shaky. Yep, There we go, we have got it up. Looking a little bit shaky there. So just maybe keep an eye on Aussie pairs as that interest rate statement come out yet. That's the key issue, isn't it? Let's just quickly have a look. Or it may be in anticipation of that, just a little bit of money coming off. So we've got current account balance. No, that statement comes out in about an hour. So just watch what happens to the markets and the AUD in around about an hour. That may be the point at which we get a market movement, which may offer an opportunity either way. Anyway, I hope that's okay. We'll see you at Inner Circle tomorrow evening for those of you who are rocking along. Take care of yourselves. Enjoy the rest of your day. David, you're welcome. All good, Ross. I'll drop you a line in a little while. And we'll meet very soon. Take care. Bye-bye for now. You're welcome, Ewan. Good to see you, mate.